Tesla stock has fallen by over 65% since its all-time high on the 4th of November 2021, falling from a total market cap of $1.2 trillion to just $435 billion. Tesla was added to the S&P 500 in late 2020 and has since caused a collective loss of around $24 billion for investors of this fund, leading many to question why this has been the case. Up until the previously mentioned all-time high had been reached, things were going swimmingly well for Tesla investors. The stock had grown by an astonishing 1,300% since its lows at the time of market turmoil in March 2021, with one Singapore-based investor making a whopping $7 billion from this increase. Despite automotive chip shortages, Tesla had published a solid set of delivery numbers for Q3 of 2021, noting that they had delivered a record 241,300 vehicles for the quarter, a sequential increase of 20% and a year-over-year increase of almost 73%. These impressive numbers had indicated that Tesla was able to overcome the supply chain issues that were impacting the broader auto industry. Elon Musk, Tesla's CEO, had also been releasing more details about Tesla's full self-driving feature, a factor which influenced the price surge as investors bought into the potential of it. However, at a market cap of a whopping $1.2 trillion, many became wary of the company's inflated stock price. Tesla had a market cap that was greater than the next 10 automakers combined, whilst only selling 1/50th of their combined number of cars. Many financial outlets pointed out that they thought a correction was coming soon, but the whopping size of that correction may not have been predicted by many. Ultimately, we can definitely chalk down the massively inflated initial price as a key contributing factor to the downfall of Tesla stock. If you are clued up in the investment world, you would know that since Tesla stock has been falling, so too has the market in general. Both the Nasdaq and the S&P 500, which are two of the biggest index funds, have also followed a similar downwards trajectory, albeit not at quite the same scale. Other automobile stocks have also lost value. Since November 2021, General Motors and Ford have lost 45% and 54% of their value respectively. Therefore, we can also attribute overall market movement as another reason for the rapid loss of value of Tesla stock. However, the losses accumulated by Tesla are higher than their competitors, and recently another big piece of news came to light which has acted as further catalyst for their downfall: the acquisition of Twitter by Elon Musk on the 28th of October. Since this news, Tesla stock has dropped by around 38%, and the reason for this largely comes from how Musk decided to finance this acquisition. Through multiple transactions, Musk sold around $20 billion worth of Tesla shares to free up cash for the acquisition. As an investor, seeing the CEO of a company you invested in sell his own shares is a massive red flag, and this proved to be a catalyst for Tesla stock's demise. As recently as last week, Musk decided to sell another 22 million shares of Tesla, raising $3.6 billion. Although the reason for this has been undisclosed, many are speculating that he has done this to either cover Twitter losses or further fund its acquisition. Of course, Tesla stock has seen further decline since this piece of news came out. Much of the initial uprise in Tesla stock had been due to hardcore belief in Musk himself, and since the acquisition of Twitter, he has stated himself that he has too much work to do, leading investors to believe that growth at Tesla may not be what it once was. Musk has also become a highly controversial figure recently, after he, quote, went on a firing frenzy at Twitter, end quote. This has directly tied into his involvement of Tesla, and The Guardian have pointed out that customers don't want their cars to be controversial, with many calling on him to step down as the CEO. He hosted a poll on Twitter asking if he should do just that, and the majority sided with him stepping down. However, he has not confirmed that he will do this yet, and with the future of Tesla looking more and more uncertain, there is no telling to just how far it will drop. An analyst at Goldman Sachs recently slashed Tesla's price target from $305 to $235, saying that Musk's Twitter involvement has led to the Tesla brand becoming more polarizing. The public consensus seems to be that Musk needs to delegate the responsibilities of Twitter so that he can focus on making Tesla the rapidly growing company that it once was. And with the share price tanking, it seems obvious that Tesla remains a sore sight for investors who are left holding the bag until this happens. It should be noted that fundamentally the company is doing fine, with the recent Q3 report showing a higher than expected earnings per share value and a net income of over double what it was a year ago, albeit with slightly lower than expected revenues. The fate of this company's stock price seems to be largely in the hands of what Musk decides to do regarding the Twitter situation. What do you guys think will happen regarding this? And are you bullish or bearish on Tesla? Let me know in the comments.